everyone, very welcome to today's event with Johan Annell, who is a HHGA member, and he's going to speak about supply chains and production strategy in Asia. And Johan, you are very welcome. You are in Beijing, like we just said, and we are so happy to have you here. And today we will be speaking English because we have English participants today. So yeah, very welcome, Johan.
Yeah, thank you so much, Christina, and thank you all for taking time of what is your lunch break for many of you to listen to some reflections and experiences from our work in Asia, where I'm personally based in Beijing. So quick about me, I studied in Gothenburg at School of Business Economics and Chalmers, and now since 2019 I live in Beijing, where I run the local office of Asia Perspective, and we are a management consultancy and also venture builder who participate in entrepreneurial projects, everything connected between the Nordics and Asia. So that's what I and about 40 colleagues do across our Asian offices. So we work with market entry and the topic of today being mainly sourcing and supply chain management, which is really a large part of what we do for many clients from primarily the Nordics. And we've been doing this for about 10 years, and some examples of companies we have and worked with. So enough about us, and I'd like to start this talk about supply chain by giving just some perspective and look back from where I am in Beijing. It's really been a tremendous change this past decade and a bit more. One way to illustrate that is, of course, thinking back to 2008, when I was still in university, and around this time also started to get really interested in Chinese language and culture, traveling to China. China did this great ceremony and a very hopeful thing, opening up even more to the world, getting prepared for the Olympics. We didn't fully have high-speed trains, and many things that we now take for granted 14 years later wasn't there. And China was a much smaller part of the global economy than today, when we just now, some week ago, finished the Winter Olympics, which has been a very interesting experience to see from this point of being so close in the world city of Beijing. So if we take the bigger perspective on just how much has happened these past years, it's really a huge shift in how the economic center of the world has been shifting to Asia, where China has stood out with 11 times increase in GDP during these 20 years, with the past decade still being like a doubling, but from a higher base, but a bit slower pace than before. And then we have, of course, many other economies in Asia that are at different stages of their development. So looking at these numbers back somewhere around 2008, we had a China that was about the same size as Japan economically. Now that picture has shifted, and very much of APAC is really the Chinese economy, with Southeast Asia coming and India still economically quite a lot smaller, but of course very important, which we'll get back to more. And this is important as really keeping in mind for any Swedish company when selling solutions and understanding the world markets, that very often the majority of the market is in Asia, and for some sectors may even be just China, this majority of, for example, many industrial products. So diving deeper into the region of Southeast Asia, here we have some economies that really stand out, notably Vietnam, where we see the most dramatic changes these past 20 years, and so much is going on at the moment related to manufacturing and supply chain, and of course also rising salaries and good prospects for the future driving demand for other solutions. So this is really giving you a bit of a view where things are growing a lot. Indonesia still dominating in terms of sheer size, but when you look at what's actually relevant to foreign companies in the sourcing, we see countries like Vietnam in particular at the moment gaining a lot, but of course also a lot of potential to grow even more across Southeast Asia that is becoming more integrated, and also of course often discussed as an alternative to China, which is getting more expensive and have other issues on competitiveness that really vary between industries. So we asked last year about what the Nordic companies actually see when looking at their supply chain from many different aspects. So this is just an extract of what they answered mid last year. It is really about half of the companies who really seriously are considering moving out production of China. And this is very much driven by cost savings. That China is getting expensive from a labor cost of view, and many of the competing supplier markets are getting increasingly sophisticated so that you can actually find the competent suppliers. And that is, of course, the biggest driver. Then also risk mitigation and companies that may have secondary suppliers or who may have certain categories in alternative markets except for China. So we see now that this is starting to happen. It hasn't been such dramatic change in the numbers yet, but now quite a few companies have taken these decisions and are working actively to shift more of their supply base. But with that said, this should not be taken to mean that manufacturing overall is leaving China. There's also many companies that are really doubling down on China and investing, very much driven by the domestic market, where you have higher and higher requirements and higher incomes driving demand and giving good competitiveness for many Western companies. So that is something that is happening. And you can also take that's China moving up the value chain, with some clusters really being very, very competitive in China due to good productivity and having the deep supply chain and R&D logistics capabilities that are tough to compete with. So you have a move of industry coming into China, and you have a move coming out, and then of course a constant struggle for competitiveness as costs are rising, the renminbi is getting stronger, and we have issues such as the zero COVID policy, of course, that really impacts ability to travel and creates operational disturbances for companies when factories have to shut or internal logistics get disturbed. So it will be a very interesting year ahead with more changes and volatility in supply chains, of course. To dive in a little bit more on numbers, here we have really a rather huge difference between the costs in China, where salaries are overall still rising at quite a good pace, and trying to compete against countries such as Vietnam that may have as low as a quarter of the salary levels in China. That is really a constant competitive pressure that drives companies to look more at these other markets. And also, as infrastructure improves, it may be easier to shift parts of the work from China to Southeast Asia, but combining, for example, putting assembly and some tasks there while keeping other parts of supply chain in China, and sometimes as well sending out from China and then partially back to China. So many companies that need to really look at this, including, of course, Chinese manufacturers themselves, who also outsource and establish themselves outside of China. We also have another big development the past few years is that there's a lot of free trade agreements that have come into force and that are now coming into force. Often this is spread over quite many years, going to lower or even zero tariffs and working with various non-tariff barriers, such as aligning standards across industries and making processes easier for being able to compete within these economic blocks. So in East Asia, the most significant that just happened, that is the Regional Comprehensive Economic Partnership, RCEP, that is covering about a third of global GDP and really links China, Japan, South Korea, and the Southeast Asian countries more. And this will, of course, drive further integration within this region in the future. We also have some other agreements, such as covering the Pacific and many North American countries, except US, notably. But there are these agreements to watch. There's also between the European Union and some key countries agreements that can really help quite a bit, such as with Vietnam that came into force just 2020. Little before that was also European Union and Japan, who agree on much more, so that there is a clearer roadmap. And this, of course, needs to be analyzed based on the industry, how much difference that makes for their exports to Europe, and also for the structure of the supply chains and the competitiveness of companies inside the trading bloc. There is, of course, a trend that RCEP will be part of driving, contributing to regionalization in a positive way, that countries that are close to each other may trade even more internally. Then getting into infrastructure and what is happening there. It's really one of those key drivers of growth. It's a large part of GDP has been spent in, here taking China as an example, really pouring lots and lots of investment into hard infrastructure the past years. And much of that will continue, even though there is the talk of reducing hard infrastructure and working more with what may call new infrastructure, such as 5G, for example, or even healthcare being counted as infrastructure. That will come and more, but also there's still lots of investments to be done within China in the transportation infrastructure to make logistics more efficient and part of driving growth. Here, China has, as everyone knows, invested a lot abroad with projects establishing transport and energy really as the key parts of the Belt and Road initiatives. That continues and is really like an umbrella term covering lots of different investments with different logic, but overall connecting China more closely to the world and also giving better access to Chinese markets and to suppliers for China, of course. And this is looking at ASEAN. The infrastructure spending is really a trend that has been taking off recent years and will continue to be a driver of making it easier to have supply chains focused in Southeast Asia. And it's highly necessary, of course. The population is becoming more urbanized and more advanced. The industry needs better transportation. So several factors working together to really push this trend within ASEAN. And this is to some extent Chinese investments, but even more actually, it's Japan is a major financier of these ongoing projects in countries such as Vietnam and Thailand, Philippines, where really lots and lots of Japanese infrastructure investment is going on, and of course quite a few others as well. So there was some things about growth drivers, and to summarize overall these mega trading problems that particularly impact China, but that are also valid for quite many other countries to different degrees, is the trends of many countries having aging populations and just a few who still have a increasing share of labor force, the overall competitiveness of countries where some stagnate more and are struggling, and the great environmental challenges that follow with increased industrial production and increased energy use. So have all of these mega trends, then also more political on that the development between countries and within countries is going in different paces, and that, depending on how that is handled, that can lead to quite a bit of instability, and also interact with how you develop trade. We'll talk more on supply chain disruptions later, but we'll pick up some other trends that also impact long-term supply chains. Here we have cross-border data. That is also something where China is particularly standing out with regulating data a lot more and being quite insulated from the rest of the world in terms of its digital ecosystem, and has launched a number of new laws recently that put higher requirements on compliance on things such as personal data and also cybersecurity and what can be transferred. And this is not only China. China has gone the furthest, but other countries have this as well, and that's something that really creates quite a lot of new challenges for companies to be global, because global supply chains really rely on being able to operate efficiently with lots of data to their own subsidiaries, in particular, cloud solutions, and so on. And this connects to standards, not only digital, but also other standards in industry. No one really wants it to diverge, but then due to special interests and due to different priorities, there is always this pull of standards going apart and really making companies have to have several different products, for example, or much more documentation. So it's a constant running challenge. Then we have the overall politicization of the business environment, which is really something that in China has been raised for many years by chambers of commerce and so on, and that you see, and that has an impact. And this, of course, also something that more or less happens in other countries as well. When we have more of countries isolating in some ways, facing crises such as COVID, and overall a trend of politics getting into business more and more business decisions not done completely on just what's commercial, because you need to take into account what decisions may happen and also how this may look at the very local political level, which is something that companies may not be used to the same extent acting outside Asia, that this really needs to be taken into account as part of overall risk analysis. Then getting into a bit of more all the logistics problems, we have an underlying several trends that have really driven the demand side for logistics up during the pandemic. one of them being the shift to e-commerce that has been quite dramatic in many places. And that does change the patterns of how goods are delivered, and overall puts more strain because you deliver to the customer's home instead of going out to a store. So suddenly you're using logistics facilities in another way. So that really contributes to some of the logistics problems. And that is together with that overall people are demanding more physical goods that are very much produced in Asia, particularly in China, which makes the supply chains imbalanced. And Chinese exports have really increased a lot during the pandemic, which is one big part of explaining the supply chain problems, and also problems such as the lack of energy for industry that we saw last year, really linked to that energy usage really overshot what the planners and forecasters thought. So to give some perspective on the numbers, where we came from back in 2020, it's more normal prices being a little bit higher going out of East Asia to North Europe, but not so dramatic difference, to now when it's really for this past years been extremely high container freight rates that are really impacting lots of business. Many, they just have to choose to, we can't really change the supply chain in the short term. The governments just have to pay. But in the longer term, of course, this has an impact when, especially if you are freighting goods with lower value and things that, it's the freight cost is really a very significant part of your total cost. And this, of course, forecasted as well to really come through even more on consumer prices. To some extent, we already saw that last year with higher inflation numbers showing up and even lack of goods in Europe. And unfortunately, that's quite likely to continue and to also come through the economy as companies see that they need to raise prices towards consumers. Looking at air freight, it's here just looking at this year with similar pattern with a lot of volatility, looking at China and Northern Europe. Of course, due to overall high demand and companies choosing to fly things that they normally would never fly because you have disturbances and you need to deliver to the customer, and also overall reduced capacity since there is very, very few passenger flights in and out of China, and those used to carry quite a bit of cargo. And for the pure cargo flights, they also have quite a lot of restrictions on their operations. So volatile and higher prices, that is quite likely to persist over time. Now, since the past week, we also have as one of the many bad consequences of the Russian invasion of Ukraine, the airlines just not choosing to or not able to fly over Russian airspace, which will of course contribute further. So just a very quick example is routes that you would see London to New Delhi or Finland to Singapore, for example. These do become significantly longer. Here, when we calculate, that's about 15% longer route you have, and with some increase in speed as well, so that you will burn more fuel. Exactly how much this will mean in terms of freight prices is of course hard to forecast, but it's likely that when rates are adjusted coming days, it will have an impact and of course contribute to a continuously quite messy situation. We have another ongoing crisis that really hit many companies badly during last year, and that continues to be a big problem. That's the shortage of semiconductors, much of which can be traced to that people simply wanted a lot more electronics during the pandemic, and that demand is so massive that much of the semiconductors that may have been used for other things were not there, and of course the electronics makers as well have these problems, and combining that with supply shocks such as burning factories, for example, and many things at the same time has made the situation difficult, with demand for many industries also being for semiconductors that are already quite old, because you designed, for example, a car quite some time ago and it's long cycles, and nobody wants to invest in new capacity for older components. So many companies end up having to redesign, and we also have cases of companies having to deliver products where everything is not working, like the mirrors, for example, because you can't get that component. So a very messy situation where this is just one measure of the lead time that is now really long, 25 weeks. That makes it harder to develop new products and puts a lot more demand on how you forecast and place your orders. And in practice, companies also have to work a lot with other channels than usual, working with traders who speculate and to gather up stock of product that may have been made quite some time ago, since the official distributors and actual manufacturers are often out of stock. Going into more of ongoing risks, we have energy, which is really a global crisis, and which we saw an impact of in China last year, with coal prices really surging and just not having enough coal, and plants not being able to burn coal profitably to produce electricity. So that really struck with some blackouts, especially energy restrictions on factories that were going on last fall. Now the situation is a bit more stable, but you still have an ongoing problem where China really has a lot of energy transition left to do. And the situation is quite similar in many other markets. Of course, European Union is somewhat less fossil dependent, but still very much dependent on fossil. So this is something that will continue to impact the relative prices, and that can also lead to disruptions when there just isn't any electricity, or you're not allowed to use it because you get rationing. Then a bit longer term trend, the pricing or the energy transition and the pricing of carbon emissions will of course also have a really large impact. Here just illustrating China, the massiveness of that change that China will need to undergo. It's to reach from that peak that we'll have in just 8 years. China will really need to go down in the same kind of pace as during the real boom years of massively increased production and wealth. And the only way to do that is, of course, to invest in other energy sources and to make the industry more energy efficient, as the industry is really the main driver of consuming electricity and consuming heat energy and producing carbon. So I think this is something that you already start to see with Chinese taxation of carbon emissions that will go up, and as well the European Union is starting to plan for the carbon border taxes and demanding more data already from next year, particularly on high energy commodities such as steel, where China is really dominating a lot of world supply. So that was a bit of overview on things happening within supply chain in Asia. So I'll take the last minutes we have to talk a bit more on what kind of tools you can use and that companies are using to navigate this uncertain environment. And yeah, because you need to take decisions now that will be robust for the future. And many of these decisions, yeah, where you put your factory or how you choose to set up your supplier base, it's not something you adjust very quickly. It's large investments and really strategic decisions that will be made under great uncertainty. So having structured ways of working this is really something that is key, and that we've also seen during the pandemic and all these disturbances, that some companies within same industries, some stand out and have managed relatively okay. Others have not managed so well and have been losing revenue due to not being able to deliver or faced much harder increases in cost. So it has really differed, and that's a lot. Some things because of luck, but also because some companies were proactively understanding their supply chains, making investments that were felt as costly back then, but that took down their overall risk level. So that's really one key message for anyone working with supply chain, to really think about risk and think about what can happen. And in order to do that, here's some models on how to do that with very standard impact likelihood matrix to see where do we have large risks and what are the likelihood of them happening. It looks simple, but it's quite few companies that really use this in a good way. And by a good way, then you would do this exercise and really think broadly about the real risks and quantify that so that you see what is the actual impact on our bottom line, such as what will be the cash flow impact during the coming years if this happens, and how will that impact our overall value of the company and our ability to deliver, to really put those numbers there. It's a highly valuable exercise. And then the next step after doing that is, of course, to make sure also that people across the company don't just look at this and consider that, yeah, business is risky, but that they actually take action and do mitigations. And that's something some companies are standing out in doing better, to really see what can we do to take down the risk level and weigh that against other objectives. Another tool that is really to deal with uncertainty and also stretch how you're thinking about complex questions such as supply chain and linking the demand from end customers to what may happen on the supply side. It's scenario planning, taken as an exercise to imagine possible futures. Also, models of overall competitiveness to understand industries. This is often used to position your own product and try to be competitive there. But in many ways, it's also valid when looking at what is the supplier industries, how will these develop. So it's really one of these mental models that companies can benefit from using. Then we have some more supply chain specific to really work with models such as SCORE to have a very structured way of reviewing how does our supply chain work and how do our suppliers and those below work, and specific modes of how you run supply chains, where just in time is one way of running, of course, and there's other, not to say philosophies, but ways that you can prioritize in how to run supply chain. And I will take last few minutes to talk a little bit more about how companies have actually applied these models. So And for scenario planning, a really famous example of why this is useful, that's related to the oil price, where Shell was early really on thinking broadly, what could the price of oil be in the future? And here they had been working with a wide range of what the future may look like, and saw things that now everybody knows this happened, the oil crisis of 1973. But that was not what people expected back in the 60s, where oil prices were a lot lower. So Shell, they actually worked with scenarios and saw that things could happen. They don't know exactly what would happen, but they saw far enough in order to take decisions that gave them a good position and good options when a certain future unfolded. Also, other ways of looking at risk is much more operational and in the here and now, where it's companies and investors often make mistakes and assume a bit too much that things are working well. So here is just one example. It's less about supply chain, but things that you might not expect from pretty huge companies. We have quite a few examples of like Wirecard, WeWork, and others in the West, where it's really things in the company that investors may not have expected. And in China, we had Luckin Coffee that wasn't still is a really successful company. It's spreading coffee cultures to many more, but where the accounting just wasn't at all what you would expect in a large company. And this turned out to be millions of purely fake revenue. And this is what happens in pretty famous companies with large investors. And of course, when you look at smaller companies, it's even more important to really be mindful of that things may not be what they seem, and that you have significant risks of pure fraud and other things in the operations, both in your own production and at the suppliers. That's once more part of good risk management to really detect early, but also be ready for that. You may not have all the information for really unexpected things to happen. And very briefly on supply chain overall, I think it's one important aspect is to really see a supply chain as a production. This one model for looking at a single factory and priorities, objectives, and should also their supply chain as making strategic choices. There's one example of companies making a very particular choice in a business model, focusing completely on making products in a quicker way and competing with extreme level of renewal in products and being able to reconfigure supply chain. We have Shein that I think is becoming quite familiar now across the world, and this is not the highest quality product and not the quickest delivery to the end consumer, but having an ability to deliver from China a huge range of products at very low prices, which is fit for a certain segment, of course not for others. So yeah, not to go deeper on score model, just to wrap up, I think our overall advice to companies working with supply chains and really becoming apparent in Asia is really understand this, the risk exposure, supervise, work on scenario planning, make quantification, and have this way of thinking that you have strategic trade-offs. Then of course you have cross-cultural understanding and overall context that also is a really big factor, and something for another webinar to go more in depth on. So thank you very much.
Thank you, Johan, for a very interesting speech. We have some questions before we. Well, let's take Gustav here. Given the last 2 years and the spotlight it put on supply chain resilience, do you foresee a shift to more localized manufacturing in the EU and US as opposed to East Asia?
Well, I think we don't need to foresee it. It is already happening with quite a few companies who are near sourcing, for example, in Eastern Europe and Turkey. So that is to some extent coming. Then it may not be as dramatic as some would think. And it takes quite a lot of time to change these supply chains. So often companies may, even if the costs go up very much, really wait quite a bit with these decisions, and they may come more when you, for example, launch new products or make other major changes in your supply network.
Thank you. And Yibo is, hi Johan, thanks for the great presentation. China during the past years invested in train freight to Europe through Russia. Train freight has been a good option that offers better freight time compared to sea. How do you see the recent Russia-Ukraine crisis may affect the deliveries to Europe?
So I think here it's a bit too early to say fully what the impact will be, but clearly companies are worried and planning for that there may be more disturbances. Of course, do you want to, at this moment of great uncertainty, put your goods on a train on that route? Something you would, companies are really considering.
Okay, so it's 12:54. If there's anyone who has a very quick question, please turn on your microphone and ask Johan directly. Otherwise, I think we will have to say thank you very much. Thank you for today. Thank you to everyone who participated. Johan, big thank you. And the next event will be on the 16th of March when Olof Manner from Swedbank is going to talk about troubled times, the macroeconomic forecast, and that's highly what do you say? Not actual. It's very up-to-date subject, I must say. It's very troubling at the moment. So thank you so much. Hope to see you soon again. Gustav writes, thank you. You are very interesting presentation.
Thanks for having me.
All of you. Bye-bye. Nice to see you.
Bye-bye.
Bye. See you soon again, I hope.